Welcome back. It's time for a look at the day's business news. Owen's here. Hello again, Owen. And we're also joined by Joseph Sveglic, the Assistant Chief Economist for the Asian Development Bank. Hello, thanks very much for coming in. Now, we're going to look first, Owen, at the latest market numbers.
Yeah, big day on the Eurozone, Claire. Of course, it's been not a great week if you're invested in Europe at all. We've got two big bond sales this Thursday. France and Spain between them auctioning off around 13 billion euros of government debt. Look out for the moves in Spain, of course, a country that's now all but officially in recession, selling off debt today. All the European markets, though, have opened fairly brightly. We should be able to give you the numbers. There they are, all of them around 0.5% or so up there. The IBEX there, also in the green as things stand. On the Asian markets, a much choppier days trading. Japan recording a huge surplus. We know the story there after the Fukushima disaster. A deficit, I should say, not a surplus, and it's trading. Ending the day on the Nikkei around 0.8% down. Quite a few earnings around as well, Claire, over the past 24 hours or so. We can bring up the earnings board. The stock that really caught my eye was Yum Brands. You'll probably know that from its subsidiaries, the likes of Taco Bell, KFC in the States, some of the biggest fast food restaurants in the States. Its stock absolutely flying, its earnings up more than 70% for the first quarter. What's interesting about KFC is it's not the US that's driving all the growth, it's the emerging markets, the likes of China, where they saw growth up by nearly 30%, India even better than that. So it's those emerging markets, people with more money to spend, who are buying fried chicken and the like right now. Joseph, I don't know, do they have KFC in Manila?
Yes, they do, and quite popular there as well.
What do you make of not just that stock particularly, but where the markets are heading at the moment? It's been a very, very difficult week after a great first quarter for earnings and markets.
It seems that everything started to tip in about mid-March, but we do seem to see with this more uneven results that things may have bottomed out.
Okay.
So, another important test of confidence for the Eurozone as both Spain and France prepare to sell off 13 billion euros in long-term debt. Both countries are seeing their borrowing costs rising to uncomfortable levels. But Italy is by no means out of the woods. The government's admitted it can't balance the books just yet, and it insists Italians can't suffer too many more cuts.
Radical way to protest against austerity. This museum near Naples is burning its art as a way to call for much-needed funding.
We are asking for economic, political, social and cultural support, an adequate space, a budget, the respect of the minimum standards of a museum.
But it could be a bad time for the museum to try to squeeze money out of the Italian government. The Prime Minister announced Wednesday that the country's economy will contract by 1.2% this year, worse than previously expected. Mario Monti said as a result, Rome won't be able to balance its budget as promised by 2013. The government instead expects to post a deficit of 0.5% next year and says it won't have a balanced budget until 2015. With Italian public debt at 120% of GDP, Monti says continued austerity is necessary, but realizes there's only so much hardship Italians can take.
In Greece, there have been more than 1,700 suicides. These are the dramatic consequences of a crisis, and this is what we are trying to avoid here in Italy.
The Italian PM unveiled a plan Wednesday calling for job creation and policies to widen the welfare net. But as recession deepens in Italy, many say austerity measures, including budget cuts and tax hikes, are indeed taking a toll on growth.
So that's the situation in Italy for you. Joseph, just to bring you into this, obviously your beat is thousands of miles away from this, but of course what happens in the Eurozone has an impact on your part of the world as well. When you're sitting in your office in Manila and you look back to Europe, what goes through your mind in terms of this Eurozone crisis?
Well, as we're looking at the Eurozone now, we see that as one of the biggest risks for the global outlook and for Asia's outlook as well. We do think that Asia will have a relatively strong performance this year, about 6.9% for the developing areas as a whole. But if there's continued slowness in the Eurozone, that means continued weak demand for Asian exports, and that's going to act as a drag somewhat on their growth.
Could you put a figure on that? Has anybody put a figure on what it might constitute a Eurozone crisis, a sovereign default? what that might do for the numbers in terms of growth?
We haven't really looked at what you're describing as more of a doomsday scenario, because what we feel in the next 2 years, now that there's been an orderly default on Greek debt, is what is likely to happen is just these austerity measures will continue to be a drag on European growth, and so Asia will be able to manage this process, but it is something that they need to get used to the slower external demand and focus more on domestic demand.
Now, Joseph, we know that there's concern about growth tailing off in places like China and India, but we also see fuel prices flying up in countries like Indonesia. Are we looking at a global energy crisis that's going to hit your part of the world first, do you think?
Well, when we looked at our assumptions for fuel prices is that they will remain high, but we're not going to be seeing a spike in oil prices. So clearly, an unsettled situation in the Middle East is going to be a risk for our inflation forecasts in particular, but also a spike in oil prices could shave about a 0.5% to 1% off of the region's growth.
Which is huge, really, when you, as you say, when you compound that with the fact that things are slowing down, and yet I think anybody in this part of the world would give their IT to have something like 8% growth right now. So I guess we have to keep it in perspective. Claire mentioned Indonesia. That fascinates me. I was there recently, and you really see the impact of those fuel prices. I think it's about 30% or something. Everybody there is driving around on scooters. They really do feel the pinch. Is there any one country, maybe Indonesia, any one country that you think is particularly fragile or particularly vulnerable right now in your part of the world?
In fact, we're seeing relatively strong growth across the board, but there's been a lot of differences across countries depending on idiosyncratic issues. I mean, Thailand, for example, is recovering from the flooding of last year, so that the strong growth is coming mostly from that recovery. But the countries that are more open to trade, like the ASEAN countries and China, and that are, in fact, more open to the influence of a slow Europe.
And what's the single biggest challenge for you as a bank?
Well, the single biggest challenge for ADB is continued poverty reduction in the region, providing support for government's development plans in order to eliminate poverty in the Asia-Pacific region.
Okay, Joseph Serglish from the Asian Development Bank, thank you very much for coming in. Owen, just a quick note to end off with on Nokia.
Yeah, just another stock to watch, Claire. It is going to be a busy day with earnings as well in Europe. Look out for Nokia's earnings out at around about 1 p.m. Central Eastern European time or Paris time. Remember, this is the company whose stock slid by 14% earlier this week. It's been downgraded by Moody's to near junk status. They've already braced investors for the bad news, but they'll just be putting those figures into context for us. So we'll keep an eye on those earnings for you for Nokia once they're out a little later.
Okay, thanks, Owen. That's it for business. That's it from me. Do stay tuned to France 24, all the latest headlines with Stuart Norval in just a couple of minutes.